Howdy, folks. Welcome to part two of the dirty tricks of insurance companies. Part one was mostly an introduction. We're going to talk very quickly about a couple of things, and then we're going to jump into the dirty tricks of insurance companies. And as I said before, they're not so much dirty tricks as we are just uninformed and do not understand how to contract. So you could say they're dirty tricks very easily because insurance companies do not have the tallest buildings in the biggest cities for nothing. Their names are at the top of some of the biggest buildings in the world, and they are for profit. So they don't help folks out willingly. They're there to make money. And if that's a surprise to you, then sorry to shock you. So this is not going to be a super glossy presentation. The information is going to come to you down and dirty. We're not sitting in a classroom. We are out in the field. We're in a field training exercise. We're in the mud. We're in the dirt here. So this is not going to be super presentable. There's no flow charts. Towards the end, when we start going over some documentation, I will do screen share and show you some documentation. We'll cover specifically how to fill out some documentation. However, my goal is to get the information to you. So you may ask, who am I and why am I doing this? Well, I come from humble beginnings. I was a farm kid. I grew up working in sewage treatment plant and farms, tobacco, corn, gardening. Joined the military, did some municipal police work, did federal investigative work. During my time, I did probably 5,000 interviews and interrogations. I've done surveillance for the federal side, and briefly I worked for the private investigative side. I've done mid-level corporate management work. I've lived on several continents, and at one point I was even the special agent in charge on a missile range. But I prefer being in a holler in Kentucky. So how do I know insurance companies? Well, in the corporate environment, and I work for two different Fortune 100 companies, I dealt with them. And following that, I helped a lot of folks with a lot of different problems that they might have, a lot of different challenges, and I really grew to understand how insurance companies work, especially when it comes to claims, family medical leave, short-term disability, long-term disability, and those sorts of things. So if you have any possibility of coming in contact with an insurance company, and if you live in this realm today, you do, you're going to need a lot of this information, okay? Now you can follow us on YouTube, and there's going to be more to the series. I'm going to try to keep each video under 30 minutes, and we're going to go ahead and start the timer on that. And we also have a group on Facebook, if you're on Facebook, called Uncommon Law Conversations. And we do Zoom meetings on Thursday evening at 2000 hours. That's 8 p.m. for you civilians. If you want our Facebook channel, Facebook group name, you can look through the comments on this YouTube channel, and you'll find where people have asked for that and gotten it. And also you'll find where we've posted even the thumbnail will contain, for the videos, will contain the access code and password for the Zoom meeting that we have at 8 p.m. on Thursdays. And that's 8 p.m. Eastern Standard Time. So we're going to jump into this. We're going to cover a couple things. First off, we're going to cover some dirty tricks of insurance companies. And then we're going to talk about, towards the end, we're going to talk about some facts you need to know when dealing with insurance companies. So without further ado, let's jump in. So these things we're covering are not necessarily just for any one particular type of thing. So you've got, when you're dealing with an insurance company, you could be dealing with your own insurance company. Say you were in an accident, you have full coverage, you're dealing with your insurance company. Okay. You could be dealing with the insurance company of another entity, another driver. You're walking through a department store, and a live electric wire falls out of the ceiling, or a ceiling tile falls down and knocks you in the head. You could be dealing with their insurance company. You could be dealing with the insurance company of your employer. So if you have some type of employee disability claim, which of course could be your insurance company too, because it's usually under group disability type thing. So none of these fit cleanly with any one particular of those. They can be applied to across the board. And it doesn't matter if it's your insurance company or someone else's insurance company. It's still an insurance company, and the insurance companies operate a particular way. So First thing I would tell you is that if you are part of a group insurance company plan, the insurance company will talk about the plan. There will be a contract, and that contract exists between the employer and the insurance company, and you're a party to that. You'll often not receive what they call the plan. You'll receive a certificate that shows that you actually have this insurance. Okay. So you are not privy to the contract. And if you ask for the contract, you probably won't get it. So the insurance company, when you have a claim, say it's for short-term disability or for family and medical leave or for long-term disability or for workers' comp, they're going to start throwing paperwork at you, a lot of paperwork. And it's not always in your best interest to just fill that paperwork out and mail it back in. They're going to send stuff to you that is, it's going to look professional. Maybe some of it looks like it might have been photocopied by someone who's liking a few, they're a few marbles shy of a full bag of marbles. But one of the things that the insurance company will do is they'll try to change the contract. They will send you forms and get you to sign to enter into an agreement with them that wasn't the original agreement, whatever that original agreement was. You'll see forms where they ask you to sign saying that you won't defraud them, and they'll send those with every single packet that they send. They'll send you forms that in which they ask you to agree to for them to be able to communicate directly with your doctors. They'll send you forms asking you to pay back certain amounts of monies. Anything that you're sent that you sign, you agree to. So if the insurance company sends you a form and says, hey, at the end of your short-term disability, you have to pay us back all the money, and you're unwise enough to sign it, then you've changed the contract. What is a contract? A contract is the agreement between the parties. A contract is not what is written on a piece of paper. So if I contract with you to paint your house, and we sit down and draw up a 50-page contract that has witnesses and notarized signatures, it's been witnessed by lawyers, and it contains every detail that you could possibly imagine. And at the end of that contract signing, I get up and I go outside and I come back in and I tell you, I said, look, man, I screwed up. I don't have the same color of paint that I thought I had. So either our contract is null and void, or I can paint it this, or I've got this color of gray. And you look at that color and you're like, oh man, I really like that color. Just go ahead and paint it that color. But we don't go back and change the contract. So I put the paint on your house. Everything's fine, except now you refuse to pay me because it's not the color that was in the contract. Will that work out for you in court? Probably not. Why? Because we changed the contract. What's on the paper isn't the contract. What's on the paper is the memorial of the contract as it was at the time that the contract was entered into. That can change from moment to moment. Contracts are fluid. Contracts, 90% of all contracts, roughly, are completely unwritten. You walk into a restaurant and you sit down at a table, waiter or waitress hands you a menu, it's got prices on it, you order. At the end, you refuse to pay because there's no contract, right? You didn't write anything down. Did you need to write something down? No. Well, you got a menu, it had prices written on it. But when you went in there, were you expecting free food? Probably not. Was there something that made you expect free food when you walked in the door? Probably not, unless they have a sign up that says free food, right? The contract exists, but it's unwritten. When you stand in front of a vending machine and put a quarter in that vending machine, a contract now exists between you and the owner of the vending machine. That quickly. We enter into and pull out of contracts all the time. Contracts are fluid, and they have to be fluid in order for the commercial world to work. Because if we had to stop and note every single thing in writing, the commercial world would come to a stop. Contracts have to be fluid. So they'll try to change the contract on you. Keep that in mind. Now, a lot of the things that we're talking about, we'll hit the solutions later. Okay, we'll really dig into solutions later. Right now, I'm trying to give you a heads up as to what they can do to try to get things to go their way so that they're no longer paying out money, or they're paying money out for as short a time as possible. The word may. The word may is used a lot by insurance companies. They'll send you something and they'll say, if you don't send this back in within 10 days, your benefits may be discontinued. I had a phone call with an insurance adjuster one time, and he said, you know, the benefits for this person may be discontinued. I said, so they may not. And he said, no, they may be. And I said, so they may not. And we went backwards and forth a little bit. And it was fun because I understood what he was saying. He was saying this is basically a threat, right? If you don't do this, I may do this. If you don't give me money, I may hit you upside the head. May. I didn't say I would. but I may, right? Now, of course, insurance companies aren't allowed to threaten you. And that might be a good question. If they say we may cut off your benefits, you might ask, is that a threat? Well, you probably see some backpedaling real quick. Does the contract say that if I don't do what you said, that the benefits will cease? And they won't budge on that. They'll say, well, it may, because they don't have to lock themselves in. Why? Because it leaves them in a more position of power if they don't. Okay. What is may? May is an auxiliary verb qualifying the meaning of another verb by expressing ability, competency, liberty, permission, possibility. So it's something that says we may possibly cut your benefits off, but try to nail them down on what they say. So you're saying you will cut the benefits off. No, I'm saying we may. Okay, so you're saying there's a good possibility you won't. Got it. Just so as I know, it's not in the contract. I don't have to do this. Now, that doesn't mean that you do that with every time they say may. So what's another dirty trick of insurance companies? They will get you to sign a release of information. Be very careful releasing information to an insurance company. Is there some information that they need in order to process a claim or to continue paying out on a claim like a long-term disability benefit? Yes, there is. However, not everything that is in your life needs to be in their purview in order for them to continue to approve your claim, okay? Or even to initially approve an application or a claim. So be very careful signing releases of information. I would advise you to never sign an unlimited release of information. That's one where they have a thing and they'll say, we can, you signing this release of information allows us to get up to, but not including, and they'll start, banking information, medical, like it'll go on forever. Okay. That you don't want to do that generally. It's generally a bad idea to give an insurance company or anyone complete and full total access to all your information. Okay. And any release you sign should be dated and it should have an end date. Okay. For the duration of this claim or for 1 year, for 6 months, or for whatever, you should limit it. Another thing that the insurance company will do is they'll try to get you to sign a release of information that allows them to communicate directly with your doctor. I highly advise against that, because what can happen is they will go to your doctor and they'll send form after form after form after form after form. And the second that doctor doesn't send it back or doesn't complete something to their satisfaction, they'll use that to cut you off. So it's always better if you do not allow direct communication between the insurance company and the doctor. Okay. You go get those records and you submit those records. There was a point in time where I saw someone submit records via fax, email, and certified mail. Oh, and they also sent it first class mail with just a stamp, 4 ways. And the insurance company still said that they lost it. They couldn't find it and they attempted to cut off the benefits. We had the tracking number. And that's a funny story we can get into later, because I happen to have access to the employee database of the company that did the back office image processing, the documents processing for this insurance company. So I was able to call up the person who picked up the mail from the post office and get verification that the images had been put into the case. And yet the insurance company was claiming that they had not. So that was a very good confirmation of how they will lose documents. And if you're driving, don't look at the screen. It's not that important. I'm just doing air quotes around the word lose because they didn't lose the documents. They were right there. You're out on that release of information, allowing them to communicate directly with the doctor, is for you to say, I want to make sure that you have everything you need for this claim, and therefore I will be making sure that all information is mailed to you via certified mail. I would also do the return green card receipt that goes on the back of the mailing where they have to sign for it, and that gets mailed back to you. Get a notebook, a 3-ring binder, and keep track of all this stuff. Okay. You're getting ready to enter into a world of paperwork if you have a claim that is of any duration whatsoever. Number 4, the plan. You'll hear insurance companies talk about the plan. I have seen insurance agents say, well, you have to do this in accordance with the plan, or you have to sign this in accordance with the plan, or you have to agree to pay this back in accordance with the plan. Try to get the plan. I've tried to get the plan. I can't get the plan. I initially asked for the plan and I was told that the insurance company was under no obligation to give it to me, that I should go to the employer. So we went to the employer and the employer said, sorry, we're no longer the employer for this man or woman, so you've got to go to the insurance company. It was just a badminton, backwards and forth. It did not work. Couldn't find the plan. So what do? You turn it back around on them. Let them know, well, I looked through the plan, be any plan. I mean, you could sit down with a piece of paper and write out a plan. Just put the word plan at the top, and then on number 1, put get up in the morning and eat breakfast. That's a plan. Tell them, I looked through the plan. Plan didn't say I have to sign this. You're going to confuse them. They're going to say, you got the plan? Yeah, I got the plan. It's not in the plan. I don't have to sign this. If you cut my benefits off because of this and it's not in the plan, well, it is in the plan. Okay, then show me the plan. If you can't show me the plan, then we're going to assume it's not in the plan. See how that works? Bible says you should be wise as a serpent, harmless as a dove. You'll hear me say that more than once. If you have an insurance, like a group insurance policy, there is a thing called a master policy. If you have a, like your car insurance, you got full liability or whatever, you probably have access to that master policy. But in a group coverage situation, like if you work for a corporation and they cover hundreds of thousands of people with the group insurance, there's a thing called a master policy, and it's an insurance policy which covers a whole group of folks, right? As in the health or life insurance, and it's written as group insurance. Generally, there's only one master policy, and the participants only get a certificate evidencing their participation in that. So trying to find the plan is going to be very difficult. But you don't really need it because you can make up your own plan. Number 5, forms and the short answer line. So let's say you're applying for short-term disability. One of the questions may be, please describe your daily activities. Okay. And then they'll give you a little section of line at the end of the sentence and one whole complete other line. You try to fit everything on there and you stop because you hit the end and you go on the next spot on the form. I've seen insurance companies cut folks off because they failed to provide enough information. So what's the answer to that? Well, if you're going to answer the particular question and you're going to do it thoroughly, write the word see attached and attach your answer on another sheet. Okay. You could just call it attachment 1 and say see attachment 1 at the end of that question. I've seen forms filled out for insurance companies where literally every answer was see attached, see attached, see attached, see attached. Then you go to the next page, you open up a Word document and you reference that document, that question. You can even rewrite it and type out your answer. There's nothing that says that your handwriting has to be on that form and give them this information. That is a very good tactic for giving a complete and total picture to the insurance company, while at the same time not being constricted by one little line. Another little dirty trick that they used to use, I'm not sure if they do it anymore because they got slapped around a lot for it, and this just is to show you that insurance companies are not your friend, is they would send folks who were trying to establish a claim an enormous amount of paperwork. If you did not complete the paperwork and send it back in time, they would cancel the claim or deny the claim or cut off the payments and close the claim. But if you did fill out all the paperwork, they would say anyone who can fill out all this paperwork obviously can work. Therefore, we're denying your claim. So you're danged if you do, danged if you don't. I don't know that they still do that, but they might. It's a thought. If they ever try to do that, I'm going to arm you with the information that you need to meet that particular approach or tactic. All right. So number 6, forms and the retarded copy boy. I have seen insurance companies send out forms where it looks like they got someone with about an IQ of 40 to copy the form, and maybe they put it up on the plate and glass with their butt crack. Kid you not. It's cut off, it's twisted, lines aren't complete, you can't read it, it's illegible, complete lines are missing, and I don't think that's an accident. Now, I know a lot of their forms nowadays are online, but in the time that I have seen the way insurance companies function, that may be something you run across, and I want to prepare you for every eventuality. So if you get a form that is illegible, then there's a particular way to handle that. Okay, and we'll talk about that later. Number 7, duplicate forms. Okay. Forms that ask the same question in different ways. So this is really a big deal when they get to communicate directly with your doctor, because they'll try to paperwork your doctor to death. And doctors don't go into the medical field generally, and therapists don't go into their field. Psychologists don't go into their field. Therapists don't go into their field. Physical therapists don't go into their field to sit and fill out paperwork. There is a lot of that. But the last thing most of these folks want to do is sit down and fill out an entire stack of paperwork every other week for one patient. And that's what the insurance companies will do to these doctors to try to get you to just give up. It's a common tactic. And so you'll see forms where they ask a question and then like describe your daily activities. And then 2 forms later, you will find a question that says, tell us what you do day to day. And then if you don't fill out one of those completely, they'll say, well, we're going to deny you because you left this blank. So you don't leave things blank and you don't leave things unanswered. That does not mean that you provide a total and complete answer to every question, because there is some information that is none of their business. And we will cover some of that later. Okay. Your documents are unfound and the faked non-response, document sanding. Okay, so this is where the insurance company will say we did not receive your documents and we have stopped payment on your benefits. You're not going to get your check this week. So you're getting a short-term or long-term disability claim paid out or something like that. Always send in documents, certified mail, return receipt request. Cost about $6 or $7. And I know that this stuff is happening in a time when you're getting reduced pay. You're probably suffering perhaps medically or emotionally, depending on what your claim is. But this is the realistic situation that you're in. If you do not have evidence that you sent in papers, they will say that they did not get them. I've seen it over and over and over. And it's not just that the system is big and complex. Document scanning is usually done by a company that the insurance agency contracts to. Xerox, Affiliated Computer Services, there's tons of them out there. And these document scanning companies get their contract renewed on the basis of accuracy and doing the job right. Rarely do documents come through that aren't matched to a case. You should put your case number on every single document. And if it's not on a document, write it at the top, not just one time. I'm talking every single page. And if this is something you're going to be doing over and over and over, you may want to get a rubber stamp. Okay. But you want to write that case number on every page, because documents do go into these scanning centers and get lost electronically, because the insurance company is not sitting there reading a paper copy of what you send in, unless there's some small insurance company, which I don't know of any of them that are small enough to do that. They all utilize document scanning. It would just be too tremendous of a job to keep up with all the paper copies. So they outsource that. And the company that is doing the document scanning will assign people to look over documents. There'll be like one electronic repository of documents that aren't matched to a case, and they'll sit and try to figure it out and match it up, which can delay your paperwork getting attached to a case. So save yourself the trouble, send it in via certified mail. Write the certified mail number at the very top of the first page and put the claim number on every page. Got it? All right. We have 9 minutes and 40 seconds left till we hit the 30-minute mark. And we're going to cover one more thing and probably quit a little early on this one. The mandatory SSDI application. Many insurance companies, if you're going for any type of long-term disability, will tell you that it's required by the plan that you apply for Social Security disability. However, one of the things that they will do is they will ask you to sign a document where you agree to call anything over a certain amount an overpayment. And we're going to use some simple math so that I can explain. Let's say that you make, I don't know, 50, 60 grand a year. And you're going to go out on disability, long-term disability. It starts usually as short-term disability. You go out on short-term disability, maybe it turns into long-term disability after 4 months, 6 months, something like that. Usually disability is not paid out at the same rate as your regular pay. You get reduced to some percentage, like 60%. So you get 60% of your pay, okay? And let's just say that, just for math simplicity, that you're getting paid $2,000 a month from the insurance company. And the insurance company says you have to apply for Social Security disability. So you do so. And you sign all the paperwork that the insurance company sends you, because you've not watched these videos. And at the end of, say, 2 years, you get approved for Social Security disability. Now, when you apply for Social Security disability, you will get paid, you will get back paid all the way back to your application. So let's just say you apply for disability on January 1st, 2020. It takes 2 years for you to get approved, and you get approved on January 1st, 2022. Okay, so it's been 2 years. All right. Let's say that Social Security disability is going to pay you $1,000 a month. So suddenly you've got 2 years of back pay coming to you, $24,000. The first thing that's going to happen is the insurance company is going to want that 24,000, all of it, every penny. They're going to say that every penny that you get paid over 2,000 a month is an overpayment, and you signed a form agreeing to calling that an overpayment. And therefore, going forward, henceforth, what will happen is that instead of the insurance company paying you 2,000 a month, since you're getting 1,000 from Social Security disability, the insurance company will reduce your payment to 1,000, save themselves $1,000, and you'll get a total of 2,000. Is that legal? Can they do that? Well, yes, if you agree to it. Does that mean if you don't agree to it, can they not do it? If you handle it correctly, it is possible for you to get the private insurance disability and Social Security disability. I can tell you that Social Security does not care how much you get from a private insurance plan, but the private insurance plan will try to save money and not pay you anything above $2,000 a month. So if you're getting $2,000 a month from your private insurance company, and you're getting $1,000 a month from Social Security disability, they will try to get you they'll lower that pay. And if you refuse to apply for Social Security disability, they'll say, we're going to estimate that you're going to get paid this month and we're going to lower your thing anyway. So if you refuse to apply for Social Security disability, they might try that. There's ways to meet that. Okay. There are ways to meet that. And we'll talk about that down the line a little bit. So those are 10 dirty tricks that the insurance companies try to pull. Something I wanted to go over before we wrap up is some facts of this game. Okay. First off, the insurance company is not on your side at all, period. They'll sound like they're on your side. They'll call you up. They'll be friendly. Claims adjusters and all these folks from the insurance company, they can be very friendly. I've done a lot of interviews and interrogations in my time. I was always very friendly to the people that I spoke to, all while writing down information that may either deny them access to information or put them in jail or prison or be used against them in a case. You do not ever think, you should not ever think that a representative of an insurance company is on your side, even if it's your insurance company. Okay. Someone else who's not on your side, HR, human resources. In a corporation, the human resources department is there to look out after the interest of the corporation, not you. They're not on your side. It may be feigned. They may say they are, but they are not. They're there to primarily look after the interest of the company, period. So get it out of your head that HR is your resource. Human resources, it's not employee resources. Okay. Human resources. They're treating their people like a resource, and you're an interchangeable cog in a very large machine. Okay. Just look at the word human. What does that even mean? It's not man resources or women resource. Human. Hue. What does hue mean? Color. What's man mean? Hue, man, color of man. Have you ever heard of the phrase color of law? Go look up the phrase color of law. And then apply that same definition to human, color of man. Okay. And you'll start seeing what the word human really means, which will make the phrase human rights differently too. One of the things that we're going to be covering later in more detail is the 10 maxims of law. Now, there are hundreds of maxims of law. There are thousands of maxims of law. What is a maxim? What's a maxim? Let's look up the word maxim. Maxim is, come on, you should have had this available already, right? Hey, I told you this wasn't going to be smooth. A general truth or rule of conduct, a proverbial saying. There are maxims of law, general truths of law. One of those maxims may be that a man cannot be bound to do that which is impossible. Okay. There are 10 maxims that we're going to be covering during our time together in this series, talking about insurance companies and their dirty tricks. Okay. As I drop these maxims to you, you need to internalize them, write them down, find them online, print them out. I'll give you resources. Don't worry about trying to document everything as we go. Okay. But you need to know these 10 maxims that we're going to cover. Now, there's really only 8 or 9 that are super, super important, but I put 10 together. Why? 10 sounds like a beautiful round number, doesn't it? 10 commandments, 10 maxims. Okay. All 10 maxims are important. About 7, 8, 9 of them are going to be used a lot. All right. And there's hundreds of maxims out there. I have a book called Maxims of Law. It was written back in the 1800s, I think, and it's wonderful. I'll provide you with that resource later because it's very interesting reading, and it will help you in the game of commerce, the game of life. Another thing that is important is 10 days. You always have 10 days to respond to a contractual offer, and we'll go over that more in detail later, but here's how that works. You actually have 72 hours. So if I walk up to you and I say, hey, you owe me $100, you have 72 hours to consider that offer. Now, in our modern commercial world, we have the United States Postal Service, formerly the Post Office. The Post Office actually still exists, but over top of that is the United States Postal Service, which is what everyone is familiar with. They're two different entities. That's another video entirely. So let's say that you get something in the mail that says, hey, we're going to cut off your benefits. You have 72 hours to consider that off. So they have 72 hours. So you get an offer, you have 72 hours to consider it. Then you mail something back. It's another 72 hours. So there's two 72-hour periods plus the consideration period. There's the time for the offer to get to you. There's the 72 hours of consideration, and then there's the 72 hours for you to respond to them. 72 hours is 3 days. So it's 3 days to get it, 3 days to think about it, 3 days to respond to it for the offer to get back to you, to them, or to whoever it's going to. That's 9 days. So where does the 10 days come from? There is no commerce on a Sunday. So really it's 10 days. So when we get into writing some documents later, particularly things called conditional acceptances and stuff like that, you will see that we put in there, you have 10 days to respond. Now, if you get benefits turned down, if you get a claim denied, if your benefits get cut off, the insurance company will often offer you the opportunity to appeal. That is another dirty trick that we will be talking about later. You should never appeal. So join us for part 3, which is coming soon, on insurance companies and their dirty tricks. Have a good night.